What happens to money markets and stable value funds in a U.S. default?
Yeah, so money markets are, basically buying a lot, well, not all of them, but a lot of the Treasury
Yeah, short
bonds.
term kind of
Yeah.
investment.
And so you were telling me today, why don't you tell them kind of what Schwab is doing? We got notice, TD Ameritrade, who we clear through, has merged with Schwab, and or everything's getting moved over as we speak. So TD Ameritrade name will eventually disappear, actually. So Schwab was putting out a notice on what they were doing with their stable value or money markets.
Yeah, so essentially Schwab, if they have any kind of like money market that was denoted in treasuries based on treasuries, they were going to try and switch a portion of their portfolio into government agencies. They're going to not have those treasuries as allowed by their investment strategy. And from also, they're keeping extra cash on hand. So like money markets and stable value funds, they always stay at $1. And so breaking the buck is kind of like the term they say when it drops below that $1. And so Schwab's having on hand cash to basically prevent that from falling apart.
Yeah, one of the ironies is, if you read the articles, people are moving money into short-term treasuries in one way or another, either directly or into, these money markets, which is kind of counterintuitive. The U.S. is, theoretically defaulting on its obligations. However, what's going to happen, I would say the consensus is that the U.S. is not going to default on its actual treasury debt. They have lots of different things that they can look at and not pay, at least for a short period of time, outside of the treasury debt. I would not say that that's at the top of their list. I hope the top of their list is cutting back or eliminating Congress's pay for the period of time until they sign something. So not that that will solve the problem, but you never know, actually. It's not a big dollar amount, but it's a big issue to those people to not get paid. And that might get some people off the dime and get them voting for this thing and get this done with. So I suspect it gets done. However, it is kind of ironic that there's so much money moving towards an area. And again, I think they're going to be okay. The consensus is that the U.S. will continue to pay its treasury obligations because that's kind of a bedrock for everything else. You let that go, and there could be other issues because going forward, we still need to be able to issue treasuries. We have a deficit. We do not bring in as much money as we spend, and we haven't for a very long period of time. And so, having that ability to borrow is super important. And defaulting on, or even short-term defaulting on some of these obligations would hurt our ratings. So it's a much more expensive issue to default on that. So I think people are probably okay in those money markets also. But some of these companies are doing things to try to protect that also.
Yeah, they're going to hedge their bets essentially.
Yeah, yeah.